Right. Okay. So let's. I'm gonna go live on um, on the chat to just do some analysis. I had a conversation today with someone, and I was gonna go through the gap system and just show some trades that have happened. If not this week, a previous couple of weeks, and just look at how they turned out, whether they are profitable or not. Um, on the gap system. Okay, so I'm just going to start with GBP USD, and we can see the last opportunity came on the 26th of December, so 4 days ago. And this was a gap up, which meant that we needed to sell on this. And the question is whether the gap closed or not. You will notice that this was a 38 pip gap, and the reason I like currency pairs like GBP USD is the spread on them is really tight. And right now the spread on GBP USD is 1 pip. So in this kind of example, once the market opens, even though at the start of the trading day the spread tends to widen, but on something like GBP USD, you will still probably have about 3 pips as the spread. So this would have been a lovely trade. And if you notice that candle there, the low of that candle, if you look at the bottom of that, okay, if you look this way now, you can see that the low of this candle is 1.29593. So just bear that in mind, 1.29593. And that was the open of this. The prior candle was 1.29428. So sorry, the close of that candle was 1.29570. So we can see clearly that the gap closed. So we had a sell call there, or a sell signal there. We took a sell, and then price did move down the whole 38 pips before it then went up. So again, with the gap system, your area of highest probability of profit is within the gap. And if it's a wide gap, you just want to take your profit and walk away. So a 30 pip gap or a 30 pip trade is a nice trade, really. So that was a profitable trade for a sell. Then the one before that on GBP USD was on the 1st of December, and the signal on that was a buy signal. So that was a candle that closed. Then the next candle opened down there, and that was a gap down. And so what did we get? We had a buy signal, and we can see clearly that price completely closed the gap. That was again a 32 pip gap. So even if we had about 25 to 30 pip on this, that would have been a perfect trade. But obviously price continued moving up. And on this one, the one prior to that was, so that is 2 out of 2 so far. So the next one would have been this trade here. So that would have been a sell, right? And our stop loss would have been on either the high of this candle here, or the prior structure level, and the structure level would have been around here. So that would have been a 133 pip stop, which again, you control your trade size based on that. And what did we get? Price didn't quite move down on the first candle. Price moved up, so it would have been negative on day one, negative on day two, even though sometime during day two price did move down about 20 pips. So we could have made a decision to get out with those 20 pips. But if we didn't at the time, that would have been then the second day not fully closed, and then the third day, remember our stop loss is around here. So price never really got there on the third day, but we were drawn down less than 1%, obviously, but sometime during that day it completely closed the gap and would have been out of that trade very quickly. The one prior to that was on the 17th of November, so something similar. On this one, the stop loss would have been on the prior structure level, which was around here, and we can see that that would have been a loss. Our stop loss would have been hit here. By the way, the way I place my stop loss is just the system knows that that is a line of structure. and until price closes above that line. So it's not a touch. My stop loss isn't a touch on that. If price closes above that, then I'm out of the trade. And in reality, I place a hard stop loss, something like 4 gaps above the end. If it's a sell trade, is 4 gaps above. So I'll have a hard stop loss somewhere there. Yeah. And then there is a stop loss that is hidden, which is the real stop loss that is placed around there. So if we get price close above this level, it means that signal is invalidated, and so we are out with a loss. But in this case, we can see that we didn't really get a break above that level. We got a touch, and price failed to continue going up, and then we had price push down, and that was a nice profitable trade. So again, in this case, we have the third trade as a profit. Then the one prior to that was a week before, which was on the 10th of November, and that was also a sell opportunity there, and stop loss would have been the structure level. So I would have gone here for aggressive, or up there for aggressive. Doesn't really matter, but in this case we had a losing trade here. So 1, 2, 3, 4, 4 profits, 1 loss. And the one prior to that, you can clearly see on this we had a buy trade there, and boom, price completely closed the gap. That was a nice trade there, profitable. The one prior to that was also a gap down, and we had a call to buy. On the first day, price didn't go anywhere. Our stop loss would have been here or at this structure level here, but preferably here, which is about 200 pips. Again, it will be a small trade. And we can clearly see that price never really got to our stop loss, and we eventually had price break to the upside and give us a nice profit. This as well was a buy call, we buy signal, and stop loss would have been around here. So this is the hidden stop loss would have been around here or at this level here, the hidden stop loss here, and we can see that price never really closed below that line. It touched here but never closed below that line, and then came back up with vengeance and completely gave us our profit. Same here as well. That would have been an entry there, stop loss there or at that level there, and we never really had price come to this level until the gap was completely closed. Then September as well, that was a nice trade, completely closed. Buy here, stop loss would have been hidden, stop loss would have been here. So until I had a close there, I wouldn't have been out of that trade, and we only had a close around there on that candle. But before that, we had this particular candle here completely close the gap. So that would have been a nice profitable trade as well. So 1 out of about 7, 8 trades. Which other one? Let's just take another currency pair, GBP NZD. We can see even today we had a call on this, 20 pip call on this. It was a sell trade, and right now the spread on this is 8. Normally at the beginning of the day, trading day, just like now, it's 9 minutes before the new trading day, it widens. It's typically around 5, but right now it's widened, and so we'll normally have it around 12 pips. So this would have been a nice lovely trade. It's still going down 20 pips, and sell trade, nicely done. On the 26th, we also had a sell trade, nicely done, about 30 pip gap. On the 15th of December, we had a buy trade here, so a gap down for a buy trade. Stop loss would have been either at this level here, the hidden stop loss would have been at this level here or at this level here, structure level. And then you can see that was a nice buy trade there, nicely done. This would have been a losing trade, would have maybe come out half of the trade after 15 pips, but this would have been a losing trade here. This as well would have been a losing trade because the stop loss would have been at the structure level here, and we had that candle close below it. That would have been a loss. With this one, the Stop loss, the hidden stop loss would have been here. We never had a close above it until price came down and gave us some nice profit. Here as well, the stop loss, the hidden stop loss would have been here, and we can see clearly that we had price over a couple of days completely close the gap. We had that close the gap as well. So we had two losses, but 1, 2, 3, 4, 5, 6, 7, 8, 9. So 7 out of 9 were wins, and that was up to October. And we also had a nice trade there. So stop loss would have been here. It's a very long bar, so that stop loss would have been here. Entry at this level here, boom, 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 boom. Very nice profit. This one as well, this would have been actually our hidden stop loss here, and we can see the price never really closed below that hidden stop loss, so we would have had drawdowns if we didn't close this trade here. Would have had drawdowns for a couple of days before price then broke to the upside. Nicely done. On this one, this would have been a half 50% profit and the other half a loss. This would have been a loss, stop loss around there until that day there, a loss there, profit there. So we've had about 4 losses and about 12 wins. So that's not really bad. So that's GBP and ZD. I hope this is a quick video. I just wanted to record this to have someone to explain this to someone. So typically, if I have a sell trade like that, so that one on the 26th, I would have been, the entry would have been at this level here. My stop loss will immediately be placed here. Yeah, so entry there, stop loss there, and boom, price went to the downside. Now, this is a high probability trade, so I'm not going for 1 to 2 risk to reward opportunity. Is high probability, so I'm just taking the quick profit around the gap. The highest area of highest probability area is the gap. So more than 85% of the time the gaps will close. It might not continue going in that direction, but the gaps will close. So if I can make all my profit around that gap, then that's the wisdom behind this technique. So it's not a high reward risk to reward technique. Is a high probability technique. That's why the stop loss can be wider than the take profit, because it's high probability. I'm just going for the gap, as it were. So that's the thinking behind this as well. So stop loss would have been here, and I would have made profit there. So the one that opened today, stop loss would have been up here or at this level here, put your structure at this level here, preferably for a nice bigger trade, and then that would have been a sell, and boom, 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 nicely done. Made some money on that trade. Yeah, in that case there, so that would have been the signal candle there, buy at that level there, and at that time this would have been the structure candle there. So that would have been the structure level. So, and we never got price close below that structure level, and so would have remained on that trade even though they won. We closed it completely, so we probably would have been out of that trade. But if we stayed on, this would have been on the second day would have made money, or even on the third day would have completely killed it. On that one, stop loss would have been either on that candle, but preferably at the structure level here, so at this level here, and so buy, stop loss would have been 124 pips, and would completely killed it, walked away with at least 40 pips profit. This one as well, stop loss would have been around there, or preferably at around this level here, or that level around this level here, but preferably there for a better trade. Taking a sell trade, and boom, 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 killed it, more than 19 pips. So that's really, and that one as well, the stop loss would have been, so entry would have been there for a buy, but that day we just had a very rough day that day. Stop loss would have been here, but price never really came back down here, and so that was a nicely nice win trade there of 18 pips. So that is generally, we can go on and on and on and on other opportunities. So this is GBP card. You can see the same thing, gap up, sell, and we had a nice close of the gap. Same here, had a nice close of the gap up. In this one, stop loss would have been here or at the structure level here, and would have had a close either on this candle, completely gone out of that trade with a profit, or on this one. And that would have been structure on this one. I would have calculated with this one would have been 2 of the gap, so something around here, and we had price come here and take us out of that trade. 1% loss, it's okay. This as well would have been a buy trade, and so my stop loss would have been at this level here or at this structure level here. Price never really came back down there, came down here, and we had a couple of days, so day 1, day 2, day 3, day 4, and we're in drawdown, negative but not out. Day 5, day 6, day 7, boom, we're on in profit and completely took profit on that trade. And this one was same day, took profit on the trade. That one stop loss would have been around here, entry there, price drew down a bit, never got to our stop loss, and then we also had this as profitable. So again, that's the gap system. It's profitable, it's repeatable, it's easily understood, and so that's a really quick video. I've done this live, so you must still get some areas that maybe I need to cut off. I can cut them off. It's live, and just have it as it is. But if you do have any questions, please do come back to me. And as always, I'm always happy to answer your questions. Okay, you take care, stay disciplined, and have an awesome New Year's Eve. And let's all get ready for 2020. It has a lot good promises to deliver for everyone. Okay.